The basics of managing money. Here are some simple money management skills to keep track of both income and outgoings. And we need to check that we have the right current account for our circumstances. And if we're always going to be in credit, then an overdraft facility is not important. That it's 0% and that it can be extended to whatever amount of money it can be. However, if you're needing an overdraft facility, then that's of great importance, and you need to make sure the charges are minimal and it has the right amount of overdraft facility for your needs. Whatever you do, try not to go overdrawn beyond or exceed your overdraft without letting the bank know first, and give them a reason as to why that's going to happen, because they don't like surprises. Request and retain debit card and credit card receipts from shops and print them out from your internet shopping. Retain completed checkbooks and stubs, and then print off your internet banking statements, or if you don't do internet banking, ask for your monthly statements to be sent to you from all your banks and building societies. Then, on a monthly basis, check off your expenses against this statement, and you will see expenses and some income if you're looking at your current account, likely to see. Don't forget you're unlikely to have receipts filed for standing orders, regular payments, which could be a few pounds every month, or direct debits such as sort of mortgage payments, bills can be via direct debits and the like. So also you should be aware that if you're ordering goods on the internet, you might not have the receipt to hand. So we recommend printing those off so you can refer to them and check them off. Once you've finished with the receipts, you might want to retain some for guarantee purposes. Otherwise, if you've got no further use for them, shred them. And then use a leverage file with dividers to store your different account statements, current account, savers account and things, once you check them off, and your credit card accounts as well. The most effective way to manage your money is through using a budget, and we'll touch upon this on a future seminar. This is just looking at a typical current account statement. They generally are sort of 5 columns, and they are monthly statements, and the first column has the date of the transaction, the second is the transaction details, which hopefully gives you an indication as to what that relates to, whether it was a purchase, a shop, or a salary from your employee. The sum which was withdrawn, that's often known as debit, so you might see that headed up as debit, because you are debiting your account with that money. And paid in, you might see that headed up as credits, or credits to your account. And then you've got the balance, which is a running balance after each expense or each income. And here on this statement, we started the month with £3,000 on that current account, and we ended up with £1,295 after that, those expenses and those incomes. What we can see also on the transaction details is that there is an indication as to what is a direct debit, and this could be your broadband, mortgage, gas expenses and things like that. So you don't have to worry about paying them on a regular basis, they're already coming straight out of your account. You've then got a check number 146, so this you can easily refer back to your check stub to see what 146 relates to, what purchase, in this case of £40.90. And you've got a standing order, this is a charity of £5. There are different ways of displaying this on different statements. It could be DD for direct debit, SO each bank or building society has their own particular way. And this ends this brief module, and when you're ready, please click on the next module. Thank you.